Imagine this. It's 20 years from now. You wake up, check your bank account, and it's practically empty. Your friends are traveling the world, buying their dream homes and living life on their own terms. Meanwhile, you're still grinding paycheck to paycheck, wondering, where did all the time go? Scary, right? But here's the thing. This isn't some distant nightmare. This is the future for millions of people who never take investing seriously. The question is, will you be one of them? Stick around, because in the next 10 minutes, I'll show you exactly where to start with investing, so you can build wealth, escape the paycheck to paycheck cycle, and create the financial future you actually want. And don't worry, you don't need a PhD in finance, thousands of dollars, or some crazy stock picking skills to begin. You just need to take the first step. Before we talk about stocks, crypto, or real estate, let's talk about something even more important: your mindset. Most people think investing is a game of luck. But here's the truth: wealth isn't built by luck, it's built by consistency. Think of investing like planting a tree. The earlier you start, the more time it has to grow. And the best part, even if you start small, compound interest does the heavy lifting for you. But let's be real. Most beginners hesitate because they fear losing money. That's completely normal. But what's scarier? Doing nothing and staying broke forever. Okay, ever heard someone say, I'll start investing when I make more money? That's like saying, I'll start going to the gym once I get in shape. Here's the deal. The best time to start was yesterday. The second best time? Today. All right, let's cut through the noise. No complicated strategies. No chasing the next hot stock. If you're a beginner, index funds are your best friend. They're like an all-you-can-eat buffet of the stock market. Instead of putting all your money into one risky stock, index funds spread your investment across hundreds of companies, automatically reducing risk. Here's what you do. Open a brokerage account. Fidelity, Vanguard, or Charles Schwab work great. Start with an S&P 500 index fund, like VOO or FXAIX. Invest consistently, whether it's $50, $500, or more each month, and that's it. Simple, powerful, proven. But wait, what about crypto, real estate, or individual stocks? Don't worry, we'll get there. Well, imagine if your bills paid themselves and your bank account magically grew every month. Sounds like a dream, right? Well, that's exactly what automation does for investing. Wealthy people don't rely on willpower. They set up automatic investments so their money grows on autopilot. Here's what you do. Set up an automatic transfer from your paycheck to your investment account. Make it non-negotiable, like rent or groceries. Forget about it. The market goes up and down, but over time it trends up. Want proof? If you had invested just $100 per month into the S&P 500 since 2000, you'd have over $90,000 today. And that's with zero effort beyond setting it up. But what if you want to invest in more than just stocks? Let's talk about real estate and alternative assets. Once you've built a solid stock portfolio, it's time to diversify. Real estate is one of the fastest ways to accelerate wealth. Why? Because unlike stocks, you can leverage other people's money, aka the bank, to grow your investments faster. Here's how beginners can get started. Consider house hacking, buying a property, living in one unit, and renting out the rest to cover your mortgage. Look into REITs, real estate investment trusts. These let you invest in real estate without owning physical property. The key? Don't put all your eggs in one basket. A mix of stocks, real estate, and passive income streams gives you financial stability. But there's one more thing that separates the wealthy from everyone else, and if you ignore this, you could lose everything. Most people focus on making money, but smart investors, they focus on keeping it. Here's how you protect your wealth. Emergency fund. Before investing, have 3 to 6 months of expenses saved. Diversification. Don't go all in on one investment. Avoid high-risk bets. No, you don't need to YOLO into meme stocks or gamble your savings on crypto hype. And most importantly, learn before you leap. The number one reason people lose money? They invest in things they don't understand. So take your time, educate yourself, and always, always play the long game. Now you have the blueprint. The question is, will you act on it? Remember, every wealthy person you see today was once a beginner. They just took action before it was too late. So start today, even if it's just $50 a month. Even if you feel like you don't know enough, your future self will thank you. And if you want to master the foundation of wealth building, check out my next video on pro budgeting strategies, linked in the description. Because before you grow your money, you need to know how to manage it. Click the link now and I'll see you there.